Okay, so everyone knows that your credit is looked at when trying to purchase a home or a car. Your credit score is one of the main factors used to determine whether or not you're credit worthy, and if so, at what interest rate. The higher your score, the more likely you are to get the loan or at what interest rate. But did you know that your credit could keep you from getting a job or cause you to have higher insurance rates? Today we're going to talk about the five contributors to this three-digit number that plays such a significant role in your life. Hey everybody, my name is Rahsaan Elliott with Visionary Pathfinders, where we want to help you make your money make more money. Do you remember back in school, you were given a report card that basically told you how you were doing in all of your areas of education? I want you to think about your credit report as an adult report card where you have 5 different subjects, and if you can master them, you can access things that otherwise wouldn't be available to you. However, if you fail some of the subjects, your financial potential is limited. First, let's talk about what a credit score actually is. A credit score is simply a number that banks and lenders use to evaluate your trustworthiness to repay loans. Certain jobs across America also use it to assume your level of responsibility or even whether or not you should be granted a security clearance and to what level. Credit scores range from 300 to 850, and if you look at your credit report and your score is lower than 300, that means that you're what we call credit invisible, meaning that you've never had credit or it's been so long that your credit cannot be verified, therefore you have to start over again. One mistake a lot of people make is they believe that their income is a part of the calculation of their credit score, and that's absolutely not true. Another myth that people believe is that their debt to income ratio is a factor in their credit score. This is also a false belief. Yes, it's true that banks use this information in determining whether or not to grant you a loan, but they do not contribute to the calculation of your credit score. Before we jump into what makes up your score, I want you to keep in mind that you actually have 3 credit scores, but you also have an insurance score and a hiring score as well. You have credit scores with the major credit bureaus, Equifax, TransUnion, and Experian, and although they use the same formula, most times those scores are going to be different. Why? Because by law, creditors are only required to report to one of the credit bureaus, meaning that they can report to one or multiple. That's one of the reasons why you may see some items on one credit report, but when you look at the other one, it's not there. So what does go into calculating your credit score? The first and biggest portion of your credit score is your payment history. 35% of your scores come from whether or not you pay your bills on time. Now, when I say bills, I mean your debts that are reported to the credit bureaus like credit cards, loans, and things of that nature. However, if you have other items that go into collections like judgments, charge-offs, things like that, those things will also go on your credit report and they'll hurt you. Having credit cards and using them responsibly can help you a great deal in this area. Next is your utilization, which accounts for 30% of your score. How much credit are you using compared to your credit limits? Now, there's 2 areas that go into this. The first is your standard loans. What's the current balance compared to the loan amount of the loan when you first got it? The bigger the gap, the better it is for your score. That's rather difficult to control, so when you're analyzing your loans, the most important thing that you can do is just pay them on time. Now, there's other things that you can do to benefit you and your score and possibly save you some money, but that's for a different discussion. The part that's easy for you to control is your credit card balances. You want to keep those balances at least under 30% of your limit, but under 9% is preferred. You absolutely need credit cards to max out this portion of your score, but you got to use them responsibly. Again, there's more tricks and tips, but this video is at the basic level. If you can master those 2 areas, you'll be in a very good position. Now, 15% of your score comes from your average length of credit history. To most people I talk to, this area is the most confusing because people think that when they pay off an item or close an account that their score will increase, but most times it's the exact opposite. Even if your payments were on time every month, your score will continue to increase over the term of the loan, but when you pay the item off or close the account, your score will decrease because you no longer have them contributing to that credit history, and it's no longer contributing to that 30% we just talked about because that credit is no longer available to you. This is also an area where those short-term loans and credit boosting accounts can hurt you. When those accounts close, you know what happens. As a side note, there's companies out there that will finance really inexpensive things to help boost your score. But at the end of the day, you paid up to 4 times the market value for that item, and your credit is right back where you started. Now, if you have to, and I do stress, if you have to use one of those loans to accomplish a bigger goal, make sure that goal is accomplished before you close that account. This is also why mortgage lenders and realtors tell you do not make any major moves within 6 months of purchasing a home. Either do it before or after. The easiest way to mitigate this is with credit cards. You never want to close credit cards for any reason unless your loan officer for a mortgage tells you to. The goal is for your credit cards to be older than any other account so they carry the weight of your credit history. Now, the next 2 areas both make up 10% of your score, but keep in mind that 10% should not be taken lightly. 10% of 850 is 85 points each, and you want to get as close to 850 as possible, and believe me, 850 is achievable. The first 10% is made up of having a solid combination of revolving and installment debt. Revolving debt is debt that you can use over and over and over again, like credit cards. The average person with an 850 score has 6 to 8 credit cards. Now, this doesn't mean go out and apply for credit cards if you know your credit isn't very good, but when your credit is in good shape, apply for a card, but not too much too soon. We'll talk more about that in the final section. But first, I need to explain installment debt. This is a loan or loans with fixed payments every month, like car notes, mortgages, personal loans, student loans, and so forth. The average person with excellent credit or better has at least 4 of these open at any given time. The final 10% of your score comes from inquiries. The more you apply for credit, the more it hurts your score. Ideally, you only want to apply for credit no more than twice a year. Have you ever put money in a vending machine and the vending machine kept your money and the item you were trying to purchase? This is the same thing that happens when you try to get credit with bad credit. You pay for it with the points from the inquiry and you still didn't get what you wanted. As you can see, having credit cards is important, but having the right credit cards is crucial. We'll talk more specifically about how to choose the right credit cards in another segment. For now, let's recap. If you want excellent or better credit, you have to do the following. Pay your bills on time. Keep your balances low. Don't close or cancel your credit cards. Once you've gotten those under control, get a good balance of installment and revolving debt. And finally, only apply for credit when you need credit and you know that you'll get approved. If you find this information useful and would like more information on credit and financial literacy as a whole, like and share this video. Then click that add, follow, or subscribe button depending on which platform you're viewing this on. You can also scan the QR code on the screen or visit my link tree and click Make Wealth Real for information about our products and services designed to help you achieve your financial goals. You can also email me directly at motivatemycredit@gmail.com or leave me a message. Finally, let's get in the comments with some feedback, some questions, or even some things that you would like to learn, like to learn about. And remember, it's not just about how much money you make, it's also about how much money you keep. Thanks for watching.